Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 20th of November, 2024, getting on to 5:15 p.m. Central Time. Lot of economic news about to hit you in the morning, so let's talk about it. You're going to get the Philly Fed regional business activity at 7:30, jobless claims, initial and continuing at 7:30. Conference Board's going to come out with their leading, coincident, and lagging economic indicators. Existing home sales for October will come out at 9 in the morning. Chicago Fed President Goolsbee is going to be in a panel. He'll be doing that at 9:30, so we'll should hear anything, and I'll write about it in my newsletter if he says anything of interest there. We're looking for the natural gas storage numbers, and they're coming in very low. The expectations just for 5 billion cubic feet versus an average at this time, I think it was last year, about 12 billion and 14 billion negative at this time of the year. So you're still putting a little bit away, but this is where we start going the other way in it. Kansas City Fed manufacturing numbers, well, it's not manufacturing, it is manufacturing composite and business activity. And that's going to be at 10 o'clock tomorrow. And we just had NVIDIA come out at 3:40 p.m. today, approximately. And if you take a look, they did a beat on everything that they've got there. Their forward guidance was good. They did not hit the whisper number. And that was, instead of coming in at $37.5 billion or so of sales, they were looking for, you can see here, fourth quarter, looking for that. They're talking a little lower than that, and the whisper wasn't hit. Did the market fall? At first it did. Went down about 4.5–5% right away, and then the market stabilized, and right now it's down a fraction. I don't know what it'll be in the morning, but as I see it at least, I think the market has skipped the beat there, and that's one of the hurdles to the market now in this week, trying to put in what I call those lows, which it looks like it's doing to me, and turning itself up, going into what I call the Santa Claus and maybe Santa Powell rally if the Fed decides to still cut. And by the way, the odds of a cut in December are close to 50-50, so it can go either way. But that's normal right now. You want to see the PCE index. That's yet to come out. I think it's next week. Then we get the new CPIs, PPIs, and jobs report. You're going to get all that coming out. And from there, the Fed can make its decision. Should it go? Should it stop? What I think you're going to be looking at, with the economy staying this strong, you're not going to get as many cuts as you originally thought. You're not going as deep down as you originally thought, unless the economy changes. If it changes, the Fed will adapt. But right now, I think you got to build in something different. I, for one, am liking the action I'm seeing in the stock indices. The gold market rallied. Fear index, you saw today the fear coming into the buying of the dollar and in the gold market. And that's because Ukraine used new missiles from the United Kingdom, England as we call it here, and those were also longer range. So they now have the ability to use ours and the UK's, and that gives them 155 to 190 mile capability they didn't have before. They'll ask for bigger ones. You watch. This is all still coming. And the U.S. has approved some new mines that they're going to allow, and those are personnel mines that are meant to take out troops. Watch out. This is getting to be a different game. Bonds and notes, pretty steady on this news. Currency markets tonight, not breaking or rallying, sort of sitting. And the energies, they've been stable for the past 48 hours. They really haven't gone anywhere up or down very much. So now we get to the interesting part. When we take a look at the mini S&P, you're up almost 0.5%, just over that, for the week so far. So you haven't really gone anywhere up or down, but basically up. The market's trying to hold in here. I think you can see that. The pattern has one of a lower low. This is a swing line study that I developed. It's in our charting software. If you're a TradingView client and you want to get the suite of indicators you're going to see, just go to iraepstein.com and client resources on the top right. Sign up for it there. You've got higher high, lower low. So I look at what those markets are doing. And where do you think the battleground is? You're at it. So next I look to see where the Bollinger Bands, you're far away. So you've had a correction. You have fallen back to what I call the line in the sand, and the market's fighting for direction right here, right now. In terms of momentum, you have now worked off and you're no longer in overbought territory. So from my perspective, I think you're seeing the professionals nibbling away at the 59.12 area on the long side, looking to see can they drive the market into new highs by year end. A concept, yes, but that's what I think they're doing. I think they're doing the same in the NASDAQ right here. You can see the market's fighting its battle. When we look at the Dow, I think it's easy to see that the same number shows up here at the 43,294 area. That's where I think the pros will be nibbling away in the market. I don't see it quite yet in the same vein, but I do on the chart basis. If I take the name off all the charts, it's the same here. They're all fighting at the 18-day average for direction. Now you're going to say, am I being one-sided? Am I thinking to the upside? And you are right, I am. But I go back and I look at 100 years worth of data, then I narrow it to 50-year periods, 25-year, 15, 10-year periods, and a 5-year. They all point to one thing. This is typically the week, right now, not next week, right now, that the market makes its low point and tries to accelerate away from this for the next, after this, maybe the next 2 weeks or so. Then we're into the Santa Claus period, and we'll talk about that another time. In the notes and bonds, the pros, in my opinion, are still selling short at the 18-day average. But once you take out a prior high, so if the market takes out the 110.4 area, I don't think traders will want to be short this anymore. I think they'll abandon ship. I think that if they get over 106.31 in the 5-year notes, that's about 30 seconds away. If the market gets away from that, I think the market moves. I said 30 seconds. It's 10 points away. I'm sorry. 30 seconds are only in bonds. This is a little bit different. When we look at the dollar index, bullish. The market tried to lose its embedded reading. It got a bid today. I think the pros will buy the market until the red line closes now under 79, and I think they'll target the 107 area. In the eurocurrency, you're back into the bear camp. If you take a look yesterday, this was today. I want to go to yesterday. There we go. On yesterday, when you came in, when you were making a higher high, which you did, the market was back over 20. I was looking at it do it, and then it gave it all up, and that put the market back to a 1388 reading today, and you're at a 12 now. So I think the pros are comfortable selling this market again, looking for it at the 104.36 level, lower Bollinger Band possibility. In the British pound, it kept its embedded reading, and you're getting a bearish crossover. Do you see the 18-day average just got under the 200? I've been prepping you for this to happen, so I won't be surprised if you get through these lows. I'm still very much in the bear camp. Bitcoin, I think, is going to 100,000. So I think it's a question, can the market drop down and let you into the market or not? But that's where I think it'll go, and I think it'll be a Christmas gift. That doesn't mean I'm going to be right. Just because I think these markets are going there, please listen, does not mean I'm going to be right, okay? I'm the original Swiss cheese man. I just talk about it. I'm as wrong as other traders and as right as other traders. I like to think I'm more right, but that's where this goes. In looking at the energies, you can see they're trying to build a bit of a lift at this point in time. It's too big of a risk to buy at 73.11 and consider putting a stop under that number, but the market is trying to be more bullish than bearish. Not yet so in WTI. You have a lower low, higher high. I don't see anything there. I have the same dilemma in heating oil, a higher high, a lower low, just sort of drifting right now. And natural gas took off. We're going to have the first real cold weather hitting. We are due tonight in Chicago for our first Snow on the ground. Could be an inch, inch and a half. Late in the afternoon tomorrow, it'll all go away as we have rainstorms coming in, but this is the first bit of cold weather. We've all been wearing still what we'll call fall or spring jackets, depending on if you have different ones for each part of it. And tomorrow we actually have to put on some winter coats as it's going to be in the 30s for a bit. So weather is changing. It's not only here, it's around the world, and you pay attention to that. So as I leave you, a bit of a correction still happening. Gold pretty stable in the marketplace right now, and currency's pretty flat. I'm Ira. You have yourself a great evening. I'll catch up with you all.